Let's just quickly take a look at what is happening in the markets right now. Nifty staying around that 8350 mark, hit a day high of about 8365, and from there it dropped 15 odd points and then has made a bit of a comeback. Sensex 27826, that's where it's trading about 0.5% up. The broader markets are seesawing a little bit, but seesawing in the green, well in the green. 0.4% of the BSE mid cap index, the small cap index more or less around that spot, and the Nifty Junior 1/3% up. The BSE 500 advanced decline ratio is going to be coming up on your screen in just a short while from now. There it is, 60% advances, 35% declines. 5% of the stocks are right now, about 4% of the stocks are not changing at the moment. Mr. Areef Patel, he's Vice Chairman of Patel Integrated Logistics, joins us on the phone line. I'm going to first take a look at the stock. Just look at that stock today. It's up, it's down about 1.5%. But if you bought this stock about 1 year ago, then you would have actually made 920%. This stock has gone up almost 10 times. I mean, from its 52-week low to its 52-week high, this has gone up exactly 10 times. That's what Patel Logistics is about. Mr. Areef Patel joins us. Thank you so much for joining us, sir. First, give us a sense of the business itself.
Well, currently the economy is really on an upswing, especially with the new products like the e-commerce and the Snapdeals and the Amazons of the world. Things are definitely changing in the Indian market space, especially in the logistics space. And hopefully in the upcoming months, we're looking forward for the GST actually being implemented in its true sense. And I think there's a huge upside to the whole logistics sector.
So there are two things that you do. One is, of course, transporting goods. The second, are you also in express deliveries, sir?
Yeah, our three major focus areas today in the company are basically the express delivery segment, the e-commerce segment, and of course, which is the warehousing segment, which we're actively looking at. These are the three areas of focus in the organization.
So e-commerce itself, how much of your current revenues come from e-commerce?
Well, e-com is absolutely a new segment of the business, which is mainly about, I would say, anywhere from 4 to 7% today, which we plan the next 2 years to take it to maybe about 15 to 20% of our business.
15 to 20% of your business. Last year, there was a bit of a drop in your top line and the bottom line because of the slowdown. Are you experiencing a better economy right now?
I would say the mood and the health and the feelings of the feel-good factor is definitely there. I think yet the Modi government's initiatives that they are trying to put in place need to be shown at the floor shop level, which would take time, which if any industry has to start, it takes at least 6 months to 12 months to really start up. And I think if the situation continues, I'm sure that we are looking at better days ahead.
I'm just thinking of the, on a trailing basis, if I look at your FY14 earnings, 2.5 crores was the profit, is that correct, sir?
Yeah, more or less, yeah.
And how much do you expect to be doing this year? Because you're currently at about 210 crores in terms of market capitalization itself that we are getting on our system here. That in terms of, if I look at your price to earning, it's almost 100 times on an FY14 basis. How much do you expect to be doing in FY15?
Oh, definitely we're looking at double-digit growth from where we are today. We're definitely looking at that.
Double-digit growth. So it would be fair to say that the 2.5 should be able to move towards 3 odd crores, right?
I think more than that. We believe more than that. And, definitely better than 3 crores.
Better than 3 crores. And in terms of your EBITDA margins, are you seeing an improvement with this massive e-commerce surge that has taken place?
Yes, definitely there is an upswing in the EBITDA margins. There's definitely a healthy upswing with the EBITDA margins. Definitely the business has stabilized. The negative growth of the manufacturing sector has leveled out because last 3 or 4 years, as you may know, we had a pretty flat or negative manufacturing situation. That, of course, is not worsening. There are better days ahead, and hopefully it's only going to improve.
So when I look at e-commerce, there are two things. One would be essentially picking it up from the vendor and going and giving it to the person who's buying it. The other is warehousing. You were talking about essentially providing warehouses for, would they be for e-commerce players as well?
Oh, definitely. We already have we already have a custom bonded warehouse in Chennai, which the company has been running for nearly 5 to 6 years. We're now looking to expand into the warehousing for the e-com players specifically, because that's a different segment altogether. We are in the process of gaining expertise as we speak. Obviously, we are also new in the segment. We're only a year old in the e-com space. It's a new venture. It's a new market. It's a new players, wholly new, guys who've come into the game. Domestic companies as well as international companies. So yes, we're actively looking at growing in that segment.
If I look at warehouses, if you're going to expand there, would you be looking to raise funds?
We're definitely looking at various options to raise funds today in the market space. We are talking to various players. Nothing has really materialized, but we are in the very initial stages. Yes, as going forward, we would need funds to obviously catapult our expectations, our dreams, our goals, which I think one has to keep your eyes and ears open.
But currently, your warehousing facility, what is the kind of utilization there?
Oh, we are 100% in Chennai. We have just signed a new warehouse in Mumbai, and we're looking to fit out and build out our new warehouse in Bangalore. That's where we are. And obviously going forward, based on how the market moves, the customers that come on board, the kind of capacity utilization, we would be investing, based on all that.
In terms of your costs, sir, most of it would, of course, there are warehousing costs, then there are people costs, and then there are the costs of trucking.
The operation cost.
Yeah, operation cost. Now, the fall in fuel prices, how does that affect your margins?
Oh, it's a direct impact. I mean, I would say 70% of our costs are operating costs. So the reduction in the diesel cost has, impacted our margins positively in the last 6 to 7, 8 months.
Have you had to pass it on to your consumers as well?
Well, we do pass on the hike, so we do pass on. We do give the benefit of the reduction too. It works both ways.
Are most of the contracts long-term contracts, or are they spot contracts?
All the contracts are. I would say 80% of the contracts are long-term.
Long-term. So, and they come at more or less fixed prices?
1 year, yeah. About a year.
And do they come at more or less fixed prices?
No, it's directly linked to the operating cost. So if the diesel cost does increase, we have to pass it on. I mean, it directly impacts our margins. Or if it decreases too, there's a formula which we adopt.
So is there a small lag? Is there a small lag, or is it almost immediate?
Well, I think it's anywhere between I would say 2 weeks to a month. So I would say that's immediate in our industry. That would be immediate.
Okay, I'm going to come back to the issue of debt, sir. How much is the debt right now?
Well, basically, besides the working capital debt on the balance sheet, there is no actual term loan debt.
Okay, there is no. So, but expanding warehouses cannot be done through internal accruals, can it be at the moment?
No, we will be, like I said, we would be at some stage during next year sometime looking at external, either debt or equity, a combination of both maybe.
So would it be through a follow-on public offer? Is that an option?
Well, there are various options we have at the moment, which we're actually looking through. One is obviously the preferential equity route. Okay. Combined with a debt instrument, so it will probably is part debt, part equity.
Part debt, part equity. But when you talk about e-commerce being one stream of the business, is there a chance of that stream being demerged separately and listed separately?
At this stage, it's a little premature for me to really answer that, but definitely it's going to be a division of the company at this stage, which we're going to have a separate division, which will focus on the business of e-com, which will give it focus within ourselves, within the space we operate, because we operate many products. We operate, like I said, the express product. We operate our traditional transport product. We operate the warehouse. We operate an air-to-air product. We operate the e-com product now. We're launching about 2 or 3 new products which are going to come on the shelf in the next maybe 3 to 4 months as soon as we settle down. And, we're coming out with a lot of exciting things.
One final question, sir. Would it be fair to say that the maximum growth that you expect in the near term will come from e-commerce?
Absolutely.
Okay.
I think the players of the e-com players are, as you know, have raised considerable amount of money in terms of equity, induction in their companies, and they're really looking to grow. And I think every day, if you read an ad, it's basically e-com ads that come in the newspapers today, full-page ads about Diwali sale and Christmas sale and all that, and we hope to get some part of that. We hope to be in the space and capture some part of that business.
All right, Mr. Patel, thank you so much for joining us, and hope you do manage to expand in that space. Thanks a lot. Pleasure talking to you. We're going to take a very short break, and then we'll be speaking to another player which actually gained from that entire e-commerce movement, and that is Delivery. Co-founder and CEO, Mr. Sahil Barua.